Okay, we're live, Lisa.
Yay! Hello, Chi fam. I hope you guys are
What's
all doing well. Um,
what's going on?
I don't know about you guys, but my kids' first day of school was today, so I hope you guys all had a good time.
That's why yesterday everywhere the store was so busy.
Well, the whole
Peop
entire week, really.
Yeah, that's true. Everybody was doing like last minute school shopping.
Yep, yep.
Oh my
Whatever they
god.
couldn't get from Amazon.
Oh yeah. Oh my man. You know what I was telling my wife? I'm a little disappointed because you know how they always say support your local businesses and all that. I
Yeah,
try to do that. It's so hard when you go to your local businesses and they don't have what you need. Then you're
I know.
forced to go to online like Amazon. You're forced to do all that. It's like I really don't want to. I would rather use the money to support the local community, but this is hard. I need my stuff at the end of the day,
I
you know?
know. See, here's the thing. I mean, I work with business owners, and it breaks my heart too, Chia, because the thing is, for them to keep that much inventory, they can't keep that much inventory. They just don't have enough storage space to do that, right? And when that time comes and everything like that, it's really really difficult for them. The only thing that I can say is continue to support what you can,
I
and whatever
know.
you
And
can't, then we got to do what we got to do.
it's not even it's I feel like it's not even the storage too. I think it's more like um they don't have a lot of employees that are
Oh
working now,
yeah.
so they're
Oh
understaffed.
yeah.
And some of the items that they're trying to order for inventory are taking months to get in. So like
Yeah.
there are a lot of targets right now, like the Target on Laguna Boulevard, they're downsizing. You go inside the store
Yeah.
and it's downsized.
I wouldn't really be surprised if one of these days they're just going to say, "Hey, you can come in and get stuff and everything like that." But here's the checkout stand. If we don't have it, go ahead and order it on the website right now.
Right. A lot of places are probably shifting towards that,
Yeah.
but I don't know. Some people do still prefer to do walk-ins, you know?
But what else are we going to do? We're going to be living in a world like Wally, where everybody's just at home on the computers and
Uh,
nothing, and we're all
I'll
going
be
to
on
be
my flying
unhealthy.
hoverboard. Yeah, we're gonna be all fat.
Exactly.
That's coming. Oh my god, it's scary, but that's coming.
I know.
Okay, market update, Chichi fams. Right before we start today's segment on loan scenarios, let me share my screen with all you guys real quick. There you guys go. Let's see what this last week was like for Sac County. Let me just zoom in a little bit so you guys can see that. All right. Oh man, prices went up for active listings like almost 3% just this last week. There's been about 3% more new listings that hit the market just this last week. That's good. Sold homes went down a little bit over 9%. Might have to do with a lot of inventory not being in play. Pending homes stay the same. Let's go to days in the market. All right. 1 day less compared to last week. 103% of sellers are getting what they're asking for. Okay. Let's go over here. Average price for sale. Prices went down just the last week. Sold homes went down like almost 3%. I wonder if this is going to be a trend. I guess we'll find out, huh? Well, it's actually pretty stable. If you look at this chart right here, I don't know if you guys can see that. And that is the market update for this past week, Chi fams. So today we're gonna be me and Lisa. We're gonna be going over mostly you, Lisa. I can't really talk about this stuff. Today we're gonna be going over loan scenarios. So that way you guys can figure out what your budget is when it comes to buying a home. Because I know me and Lisa, we get asked a ton of questions on a daily basis regarding how much am I going to qualify for? My credit score is like this, like that, like this, and like that. So today we're going to do kind of like a breakdown. And if we do have time, and you guys want us to do a personal scenario for your situation, just let us know in the live chat, and then we will do that. But without further ado, go ahead, Lisa.
Awesome. Thank you so much, guys. Okay, so I'm going to go ahead and break down what it takes to qualify for the loan. Okay, it's going to be very general information. Everybody's going to be, slightly different or really, really different. So please take this with a grain of salt. Okay, guys. Okay, I'm going to go ahead and share my screen here.
Mm-hmm.
Okay. Okay. GG fans, can you guys see this?
Yep.
Everybody's
I see
good?
it. It's good.
Okay.
Yeah.
All right. So let's go ahead and take a look at this scenario. Okay. So I have somebody, let's just say there's two people trying to buy a house together, and each person makes $22 an hour here. Okay. $22 an hour. The gross income is $3,666.67. Annual income is $44,000, and everybody's tax bracket's going to be different. But for now, as a general, I'm putting 25% after all of your deductions. This is how much your monthly is going to look like. This is how much you're taking home. This is important to know, and I'll share that with you in just a moment. Okay. So let's just say that what happens if your mortgage is about $3,000. PG&E, I have it as a standard of 100, SMUD at 200, cell phone bill at 200, cable internet phone at 150, garbage at 50, water at 50, sewer at 50, and car insurance at 200. These numbers, again, are very different per person, but I'm just doing this to make it easy for the general public to see. I'm doing food as a family of four, roughly about $100 a week for groceries, and $50 per car, which is also $100 a week per driver. And I'm calculating that there's going to be two drivers in a household. Okay, so this is what the total expenses is going to look like. Now, if your gross income is $3,666.67, and you both are making the same, your combined gross income is $7,333.34. Now, your net income is here. Okay, the debt to income ratio for you to qualify for a home loan. Okay, most of the time, at the worst case scenario of loans, you can go all the way up to, it's up to 45% debt to income ratio. Right now, it's not even 41%. But the reason why I'm not going more.
FHA ain't conventional?
No, FHA, you can go up to 47%. But for the sake of trying to look at everything more simply, I'm going to put it no more than 45% for right now. Okay. If we're going to go into each person individually, I'll go ahead and set that so it makes sense for each situation individually. Now, since we can go up to 3,200, okay, 3,300, okay, look at what happened, guys, okay? Because although the bank will qualify you for your gross income, if your take home only this much, okay, your combined net income is $5,000, but your expenses are $5,193. This is where you have to analyze whether or not this is something good for you. And if you're negative 193, that negative is going to continue to grow. Make sense? Okay. Now, for you to be comfortable and not have to worry about being in the negative, okay, let's just assume that your mortgage is going to be no more than 3,000. So I'm going to bring this over here to show you, okay, for 3,000 mortgage, what's the purchase price looking like, and how much do I have to put down? Okay, I think you can see this screen here. Can anybody see that? Oop, a little bit too much.
Oh, that's a little bit too much.
Okay, let me go back. Okay, we're good?
Yep.
I'll try a little bit more. Okay. For those of you on the phone, if you guys cannot see it, please let us know so that I can make it bigger. Okay. Okay. So if it's an FHA, if the allotment is 45%, and again, we're using the allotment of less than 41% in this situation so that you can continue to not be bleeding out every single month. Okay. And if that's the case, your monthly payment is going to be a little shy. Let me open this up a little bit here. Okay. to make that mark. Okay. So the purchase price is $515. Let me freeze this frame. I already froze the one. Okay, I'll just leave it at that for now. Okay, so if your purchase price is $515, okay, you're putting 3.5% down. The interest right now is currently at 2.5%. Again, guys, this is for credit scores that are above 680, okay? And your monthly payment is going to be a little shy of that $3,000 that you need to make
So,
in order
LIZA,
to make this work. Yeah,
you said that this is for credit that is above 680.
correct. Now, FHA will allow you 580 and above, okay, but the interest rate does change. So I'm just using as a best case scenario, anything above 680, you won't have a hit on the interest rate, okay?
So Jesus is saying, does two different credit scores from two different people matter? Like, let's say one is at 800 and the other one is at 620.
Okay, so the bank will use the middle of the three. If you only have two, then they will default to the lesser of the two. It's very unusual for you to have that huge of a range, but it happens.
Got it.
Okay.
There you go, Jesus. Hopefully that helps.
Okay. So for 3% down, okay, this is what it's going to roughly look like here. Actually, the interest rate is going to be at 2.875 as well. Just a moment to clear this out, guys. Let's go back. All right. So for 3% down, it's going to be $525 is the max purchase price. Again, this is basically all of this is going to be the same, but the only difference is the purchase price. So if you're doing 3% down versus FHA, you can go up to $525. If you are doing 10% down, you can go up. I'm sorry, 5% down, you can go up to $550. 10% down allows you to go up to $575, and 15% down allows you to go to $600. Okay. Let's go over here. If you put 20% down, there's no more mortgage insurance. That would help your buying power, and therefore you can go all the way up to $650, same payment. Okay. I'm going to scroll all the way down here so you can kind of see in that situation. Okay. This is how much you need as far as cash to close goes. Let me go ahead and change this.
Lisa, earlier when you commented for Jesus, you were referring to two different people and not two different agencies, right?
Yes. So earlier, what I meant was, let's just say, for instance, the credit score is Experian, Equifax, and TransUnion. Okay. So if those three scores pop up, you would take the middle or the lesser if there's only two. Now, if you're getting an 800 credit score with some random bank and then another credit score with another bank.
No. He's saying that, let's say he has a co-borrower and the co-borrower is at 620 and he's at 800.
Oh, I see. Well, unfortunately, it will always default to the person with the lesser credit.
Yep.
Okay. So here for 515 for an FHA in this situation, you're going to need a little shy of 29,000. For 5% down, you're going to need a little shy of 27,000. For 5% down, you're going to need a little over 38,000. For this situation, it's going to be 68,000. Okay. For 15% down, it's going to be almost 101,000. And if you're putting that 20% for 650, then you're going to need a little shy of 142,000. Okay. So I hope that helps. You guys kind of have an idea. You don't need a whole lot to get you where you want. Now, here's the situation where this person has no other debt, no cars, no personal loans, credit cards, or student loans. What happens when you do? So let's just say your car payment is $300,000. I'm sorry, $300. Okay. Now you can still qualify because this is up to 45%. But again, on a monthly basis, you're almost in the negative by 200. And you got to ask yourself, do I still want to do this? And this is where you guys also want to say, hey, can I truly afford this? Is this beneficial for me? There's a lot of lenders out there that won't do this. I like doing this just simply because I think that this is where you really truly know what you qualify for instead of just what the bank qualifies for. Because with this scenario, let me go back here. Here's the qualification for each type of loan, okay? I'm going to do a side-by-side here. For FHAs, your top, where your mortgage is, okay, can go all the way up to 47%. And your full debt can go all the way up to 57%. For a 3% down, the maximum is 45%, which is what I was using here to make it more simple. For if your credit is above 700 most of the time, if you do 5% or above, you can qualify for up to 50% debt to income ratio. Even though the bank allows you to do that, this is important to know, guys. The bank does not take into account any of these bills, doesn't take into account of any of these bills. They only take into account what's on right here. But you know that you still have to have all of these expenditures to live.
That's what I like about this budget sheet right here, because it shows everything. It shows like a real life scenario. So that way, anybody that's thinking about getting qualified to buy a home, they see everything up front and they don't leave anything behind, because reality is, it's not just going to be the house that you're going to be paying for. You know, it's going to be food. It's going to be maintenance. It's going to be your livelihood, you know?
Exactly. So that's why I want to share this with you guys so that you guys can see, you know, what yours is, and you can assess for yourself. You don't have to wait for somebody to tell you whether or not you do or not. You know, you can just visualize it and see it for yourself.
Yeah, I mean, like, the reason I wanted all you guys to see this cheat sheet, fams, is because budgeting is so important. A lot of times, first-time home buyers don't budget correctly. They budget based off of what the person that they initially talked to give them, which is their pre-approval, right? And a lot of, like what Lisa was saying, a lot of lenders is not gonna calculate all of your other living expenses, and they're going based off of your gross income. So if they're going based off of your gross income, then what happens after you've been taxed? Like, that's what you actually bring home. It changes everything already. So people don't really consider that, and that's why I always like to tell all my first-time home buyers, when you buy a home, make sure that you budget accordingly, so that way your lifestyle don't change. The last thing you want is to buy a home and now you're house poor. You know, and then now you're gonna hate your home. So yeah, Ralph says, is there a scenario for a single person making around 65,000 with 700 plus credit score, about 600 car payment, 200 credit card? What's the amount he can purchase? It seems the models are always on two people.
Okay. It's not always on two people. I just do it this way because it seems to be the norm.
More partners.
But yeah, but I'm more than happy to do that for you. So break that down for me, Chia, because I can't see it. So
I'll break it down.
What was it annually? Yeah, what was it annually?
Annually would be 65K.
65, okay.
With a 700 plus credit score.
Okay.
There's a $600 car payment and a $200 credit card.
Hold on, my friend. Okay. So 5416. Okay. I'm going to do this for a friend here.
Ralph is saying, what about the single people out there?
You can get a home too. I'll be more than happy to price it out so that you guys can kind of see.
You know,
that's the reason why.
Not leaving anybody out.
Yeah. Okay. Let's say 65. Okay. I'm so sorry. Who is the person that asked for this? That
Ralph.
Has the 65? Ralph. Okay. Ralph, what would you say your take home is per pay period? Or the person that I'm doing the scenario for, Chia.
So making around 65K a year, right? 700 plus credit score, you got that?
Yes.
600 card payment, 200 credit card. So about $800 of debt of obligations every month.
600. Okay. 200 in credit card. Okay. Okay.
Maybe we could do a scenario based off of 65 take home.
Yeah.
Or 65 gross and see what the difference is.
Okay.
After tax, he says he takes home about 4,100 a month.
4,100 a month. Okay. Easy peasy. So I'm going to go ahead and put that in there. 41. Okay.
Ralph, this is for a friend, right?
Okay.
Just messing with y'all. Did you want to share your screen, Lisa?
Yeah. Let me go ahead and turn back to that, guys. Okay. Can you guys see that now?
There it is. Yep, we can see it now.
So gross it's 65,000 divided. Okay. So gross is about 5416. Net is about 4,100. Okay. So the bottom debt is already at almost 15% because you have a car for 600 and credit cards for 200. Okay. Since you are single, I can't imagine your food and gas to be as high as a full family. I'm going to say that it's roughly about half of that. Okay.
Yeah, I think that'll be realistic.
Okay.
I mean, unless Ralph lives a really luxurious life, that you never know.
Right. So according to this, guys, okay, your monthly savings so far is 1841. Okay. Which, by the way, I didn't get a chance to finish this earlier, but typically I'll have a set aside for you guys. And for those of you guys who are renting, we can plug in the numbers of what you rent for right now, and I can help you build a savings plan to help you with that. 70%, since you're not homeowners, goes into your house. 10% will go into emergency. 10% goes to vacation. I love the vacation portion, so I put that in there for you. But if you guys choose not to go on vacation, that's totally fine. You can put that wherever savings bucket that you guys want. Okay. And then, of course, your retirement, because we want you to have a really successful life and not just a successful home transaction. Okay. So being that right now you have about 1,800 to work with, I'm going to put 1,800 here. Okay. What does that mean? Then that means your monthly payment cannot be more than $1,800 a month. What does that look like? So let's go ahead and play around with these numbers here. Let's go down to 400. Okay, 350.
Can you zoom in a little bit?
Yeah, sure. Better, guys?
That looks a lot better.
Cool. Okay. All right. Still too high.
Can't go above 340.
Okay. Okay. 300 looks like it's a magic number. Let's see. Let me see here. What's the debt to income ratio? So you see here, the debt to income ratio is 48%. Even for
FHA.
3% down, you can't even do that. So let's just say for 3%. Okay, 16. Okay, you can go all the way up to 1,600. Okay, so let's go back to this screen here. 1,600. What does that look like?
Maybe 280.
Okay.
Oh, never mind.
So
around there,
up to 75.
270,
Okay, and then let's say everything is all great. 700 credit score. You might be able to go up to 50%. Okay, debt to income ratio. So let's go ahead and say 325. Okay. Magic number is 1,800, so we're right below there, guys. Okay, 10%, 350. Okay, 400. Too much. 375. Still too much. Okay, 365. Okay, right there. 20% down will give you, let's say, 400. Okay, so I'm going to do the consumer friendly version of this. Okay, so in this situation, the maximum you could buy is going to be the 365 range if you have 20% down, which means it's a little over 63,000. If you stick with the minimum down, okay, the 3% or the FHA 300, FHA or the conventional 3%, okay, FHA will allow you to go up to 300 and conventional allows you to go up to 275. Okay.
Hopefully that helps. In that part on the bottom where it says 18, 16,000, 24,000, that's the cash to close that you're going to need for to
Correct.
close on the home. Okay. Just so you
Correct.
guys know, Ralph.
Okay. I hope that was helpful, guys.
So for John Doe, Ralph, 275 conventional, 3% down. FHA, 3.5% down, 300K. For that John Doe single guy.
Yeah. Actually, let me go back because we didn't play around with these numbers. Let's just say, for instance, we can go to, nope. Okay. Now you're all the way up to 50% debt to income ratio. But if you did that, you'd still be cash flow negative. This is actually not a huge cash flow negative because if you are a wage earner and you get paid every 2 weeks, that means twice a year you're going to get an additional paycheck. What that means is there's going to be 2 months out of the entire year that you get one extra paycheck, and one extra paycheck will give you the additional month bonus, which is great. Okay, so that could be your savings, and this is not so crunched. I personally don't calculate that in there. The reason why I don't is because I want you guys to have that flexibility of knowing, okay, we get that bonus. Great. Now you get to enjoy your life a little bit. You deserve it. You know, I think that a lot of times when people are on a financial diet, or any diet for that matter, they tend to like overdo it because you think that, okay, I'm behind, I got to catch up and everything like that. And then what ends up happening is that you get drained, you get burnt out, and then you just say, screw it. I'm just going to do what I want to do right now.
See, this is so important. I'm glad you did that for the John Doe, Lisa, because not many folks see the numbers, right? And then a lot of times what people have access to is just like a mortgage calculator from like Zillow or Realtor.com, and they don't really calculate everything else around them. And one thing I do want you guys to also consider is Lisa did that scenario, but then we didn't even factor in the actual tax for the property, the subject property. What if that subject property had Melrose that was $200-300 a month? What if that neighborhood had HOA that was like $50 a month? Everything ties into that now, that goes against your debt to income ratio. And now if that debt to income ratio goes up, your purchasing power is going to go down. That means you might not be able to qualify for that same $300,000 anymore for that same John Doe scenario. So that's why what I always like to do is tell all my first-time homebuyers, every subject property that you go and take a look at with your agent, if you like it, you're planning on submitting an offer, before you do that, punch in the numbers with your lender to see if it makes sense. So that, because when they punch in that address, they could find out, oh shoot, that area has Melrose. That area has HOAs. Shoot, there's flood insurance in that area that we need to account for. Everything adds up. So you have to consider that.
Right. Absolutely.
Ralph says, well, John better get married real quick, or he's gonna own a house in the Sacramento. He's never gonna own a house in Sacramento. The other thing too, he can wait and pay off the car and at the same time increase income and stuff. That is true.
Correct. That is absolutely true. So let's go ahead and go back to that scenario just a little bit, okay? Chia, you're frozen.
Hear me?
Yeah, I can hear you now.
Okay, it just went blank for a second there.
Okay. All right.
Okay. So what I was saying, sorry. What I always tell first-time home buyers is you need to the banks, the mortgage companies, they don't just look at credit. It's not just that, oh, you have a great credit, now everything else doesn't matter. No, your income matters, your debt to income ratio matters, everything matters. The subject property matters. So if your credit score isn't that great, you might have to make up for it in a higher income or a higher down payment. If your income's not great, you might have to make up for it in a better interest rate or lower debt. So there's always a lot of things to consider for a individual. That's why we always like to say it depends. Your situation, it depends. Your situation, John, it depends. Everybody's situation is gonna depend on their personal finances.
Absolutely. Okay.
Are you doing a different loan scenario?
I'm doing a couple of things here. Give me just a moment, okay, guys?
One thing we don't talk about much too is VA loans. So for VA, what's the debt to income ratio?
So the VA debt to income ratio is all the way up to 50%. It's truly the best loan out there. So if you guys have ever served, thank you so very much. And as a thank you, the lending guidelines allow for it to be the best because there's no monthly mortgage insurance. There's an upfront monthly insurance, just like FHA, but not a monthly one. So that actually increases your debt to income ratio greatly. Okay. And you can go all the way up to 50%. So it's really, really honestly the best loan out there. If I can recommend it to everybody, if it was available to everybody, that would by far be the go-to for everything.
Yeah. If you're a vet and you're not utilizing VA loan, man, what are you doing?
Well,
VA loan
the
is like
sad
the
thing
best.
is, Chia, not a lot of people, even vets, remember that they have all of these benefits, for them.
Yeah.
It's a really sad thing. So when I do an application, I always ask, hey, have you served in the U.S. military? So that we can make sure that we don't leave that on the table. Okay. So for you guys right now that are renters, let's go ahead and take a look at your scenario a little bit. Okay. Okay. I'm going to take this out. And let's just say you're one person, totally fine. You make $25 an hour. Okay. That means your gross income is $41, $66, and $67. So I'm going to put that over here. $41, $66, $67. And your net is this one right here, $31.25, $31.25. Okay. Let's say because you're renting, you're not, this rent amount, okay, includes your PG&E and SMUD and all of that stuff already, okay? And you're wondering, okay, well, how long would it take for me to be able to be a homeowner? So let's just say your monthly rent is about $1,500, okay? So over here, you'll see what your monthly savings potential is, okay? If you stay disciplined, and if this is all that you have, then this is how much you're going to have per month. In 3 months, this is going to be how much you're saving.
Zoom in a little bit, Lisa.
Absolutely. Is that better, guys?
Yeah, a lot better.
Perfect. So this is how much you're projected to be able to save, okay, based on $25 an hour. That's $50,000 a year for one person, okay? And this is how much you're projected to save in 3 months, 6 months, 12 months, and 2 years. So even if you decide that you don't want to be a homeowner, wouldn't it be nice to know that this is how much you save? And this is not you putting anything into any mutual funds or any high interest bearing accounts. This is you just putting it into regularly, not doing anything else. Very super conservative. I don't recommend it, but I'm just saying, worst case scenario, this is what you have. Okay. Now, if you had a budget plan that says, okay, 70%, because I'm not a homeowner, I'm going to put it into a separate savings account, my house savings account, and this is how much you'll be able to save for that. Life happens, guys. So I always want to put an emergency and a 10%, where your tire may blow, something breaks, you need something. There you have it. Vacation, there you have it. Retirement, there you have it. And when you are a homeowner already, and this number still stays consistent, how awesome would it be where you can have that savings account for the next house, or say you don't have it at all and you put it more into this bucket. Okay. Still a win for you guys. Okay.
That's pretty cool.
Yeah, I like it.
No, this is great because you did this yourself.
Yeah, I do this myself because I really truly wanted to see these numbers. I did this before I actually went into this industry, and because there was a couple of friends that were struggling too, and they came to me and was like, "Well, how do you break it down?" I was like, "Well, I love doing these sheets. I'm not a numbers person, guys, but I became a numbers person because numbers, when you have a dollar sign in front of it, makes a heck of a lot more sense because now it's my livelihood that's at stake. Okay, if I wanted to save for my kids' college, if I wanted to do X, Y, and Z, where can I do that? Okay, and let's be real, guys. The majority, what's $184? You're going to spend it either on yourself, in a savings, in something that's going to grow for you. Okay, and imagine you guys putting this into an interest-bearing account, a mutual fund that has about 10%. I have one right now that's earning me overall in the last 10 years 16%. So on top of you being able to save on your own, your money is going to be making money for you as well. So now that you have this set up, you have your house that's appreciating in value. Okay, that's also building that wealth for you. A lot of times people struggle with that. Well, how am I going to get to the next point? How am I going to save all this money? This is how you're going to be able to save it. You're not only working for your money, but you're having your money work for you. And eventually that is going to be a little bit heavier on the money, making more money for you versus you actually making that money. And how many of you guys would like to retire in 10, 15, 20 years instead of the normal 30, 40, 50 years, work until, you can't work anymore? Or would you like to enjoy your life a little bit more and say, hey, this is my balance. I might not get the best house in the beginning, but I'll get something that's really super easy for me. Instead of paying my landlord, I'm going to put it into myself.
Yeah, and another thing that I would like to add too is, can you keep that screen up?
Yeah,
Sorry.
sure.
Yeah, keep it back up. I wanted to bring something up because it just kind of popped up in my head. Oh, take that down. There we go. So I like how you did this because let's say
Sorry, let me move you over to this side so I can see you too.
there you go. Okay, got it. All right, so let's say the $1,500 right there is probably your home. Let's say it's your mortgage instead of an actual rental. Because let's say you can't buy your dream home right now because the market is crazy, but you're renting, and rent's going up just as high as your mortgage if you would have bought your own or rented the same home that you're living at. So let's say you decided to compromise in this market and downsize or buy something that was around $1,500 a month. That means that that means that the savings that you're getting right now from that 3 months, 6 months, 12 month that LIZA was showing right here, along with equity being built in that home. What if the market continues to go up the way it's been going, which is like 3% every month? And let's say in a year or in 2 years or so, you decide to sell it and now upgrade, because now that home has that equity now to where when you sell it, you'll be able to have access to that. You could probably utilize that to down for a higher and better home now. Because remember what I was saying earlier, if you can't make up for and income or credit, put a bigger down. And that's why right now in this market, a lot of people are able to have cash to pay for the difference on the appraisal gap. Is because some of these buyers that have cash to pay the appraisal are probably homeowners a month ago, and they sold their home and now they have all this liquid cash because of the equity in their home. So now they're using that cash to leverage and pay for the difference to win the bid, and the payments are still roughly around the same.
Right.
Because if you put a higher down payment, your monthly payments for a mortgage is going to be lower. So that's something to consider.
Right. So let's just say we go back to this screen, okay, guys, and we say we're going to do the 350 scenario, okay? The 350 scenario, which means your monthly payment is going to be $1,800. Now, for 350 in the Sacramento area, Chia, what would that get you? Bedroom, bathroom. Share with us a little bit about that.
For 1,500.
For 350,000 right now in Sacramento. How many
350,000.
bedrooms?
350,000, man. You're probably gonna be able to get a 3-bedroom, 1-bath.
Okay, 3-bedroom, 1-bath.
Yeah.
Now,
Unless
for my single,
yeah.
sorry, for my single people, think about that, guys. Okay, not everybody can afford 1,000 or 500 when you're fresh out of school or you've just started your job and everything like that. $1,500 is hefty for one person, really. If you guys are open to it, and I have quite a few of my millennials doing this, where they'll rent out the other rooms. If you're able to rent out the other rooms, let's just say for $500 a piece, okay, now your mortgage is really only going to be less than $800. So I'm going to put $800 here. Look at that. If you're already a homeowner, you're buying a house at $350, you're renting the other 2 rooms out, this is what your savings potential is going to be, guys. Okay? Now that you don't have a house anymore, let's just say you just want a regular savings or a retirement. Again, I'm going to put this at 0. I'll put this at 80. Put in, whatever account that's going to earn you some more interest and everything like that. Not only are you going to be a homeowner by doing this, but in 2 years, you're going to have, at the most conservative for your retirement, 25,000. You're going to have an additional almost 3,200 for your vacation. If you don't do anything, you don't put anything in this bucket. If there's no emergency that happened to you, which is awesome, okay, and you decide that you haven't really taken a vacation yet, this is actually how much you're going to be having in 2 years and being a homeowner.
That's awesome. So we just
there's always a way, guys. Yeah,
there is. You just gotta go over your budget with the specialist, so that way they can show you the numbers, and in that way it becomes a reality now. You know, so go ahead.
So people always say, hey, how do I choose my realtors? How do I choose my lenders? Guys, it's like 42 minutes. And I think I did about 4 scenarios already. So each one probably takes me about 10, maybe even 15 minutes because I already developed this. I already created this for myself. And therefore, I'm utilizing it for my people.
We got one more scenario for you.
Yeah, sure. Go for it.
Okay, so this is from Mitchell. The scenario is single income, 750 credit score, about 89,500 a year.
Okay.
No debt.
500 a year, no debt. Okay, awesome. Okay, I'm going to interact with Mitchell. Okay. Okay, so darn it.
You're live, so if you make a mistake, it's live.
Hang in there with me, guys.
This is gonna be your scenario, Mitchell.
7458833. Okay, 7458833. Let me just a moment here. Let me clean this out.
While we're waiting for that, Chi fams, I don't really ask for this much, but if you get a chance, hit that like button on this video. Helps with the algorithm, helps me out too, supports the video. Thank you guys very much. And again, if you guys have other questions, make sure to include them in a live chat. Okay, Chi fams? But we will get back to the scenario right now for Mitchell.
Mitchell, can you tell me what your take-home monthly is? Otherwise, I'm going to calculate this at.
There's a lag, so I'm pretty sure.
Yeah. Well,
yeah.
Just in case, I'm going to put it at here, 559375. Okay. So Mitchell is telling me that there is no debt, but I'm gonna still plug cell phone, cable, internet. Mitchell, if you want to also put that in the comments from the list of this, what it is that you have, so I can be a little bit more accurate for you, great. If not, I'm just gonna default to this. But man, Mitchell has a potential.
So Mitchell is saying this is not including money that I make on the side.
Woohoo! Okay, well, I won't include it for now, but let's play around with this, because anytime you have side money that is not needed to buy you the house that you want, how awesome is that you can put that into another interest-bearing vehicle and make money that way, you know?
Right.
Okay. I'm assuming, Mitchell, that this is going to be for you being able to purchase a house. So once you do purchase a house, these will come into play. So I'm going to plug these numbers back in, okay?
Mitchell says $550 a week.
Is that the side hustle?
Is that the side hustle or is that the take home? Because that doesn't add up with the $89K.
Well, it could if Mitchell is putting a lot of it into his retirement fund too.
$5,500 a week.
$5,500 a week. Is that with the side hustle? I'm assuming as well, because that's a heck of a lot more than the
89.
89.
Gross 55. Maybe Mitchell meant 5,500 a month.
Yeah, because that seems accurate to me, because this is what I'm having with the net. So correct.
The gross is probably, yeah.
Yeah, a lot of times when you guys comment, I think that there is a lag. So if anything, if this is accurate, Mitchell, then this is what your savings potential is. What I'm going to do is I'm going to do a scenario, and hopefully it answers the question that you were hoping to get. So let's go ahead and see here. If we were to do 4,000, your debt to income ratio as a total, if we calculate no debts here, okay, no cars or anything like that, your full debt to income ratio is above 54%. So let's go ahead and go down a little bit. Okay. 30. Okay. All right. And again, this is not going to be for every scenario, but for simplicity reasons, guys, I'm going to leave it at 45%. Okay. Okay. If we're able to go up to 3,300 a month, what does that look like?
Yeah, Mitchell says it was a month, not a week. Sorry.
No worries.
Makes sense.
Yeah.
Good thing numbers don't lie.
Okay, 33, because this is FHA, it will allow us to go a little bit more. So that's fine. 545, and then conventional. Okay. Okay, keep in mind, guys, when you're putting 3% down, the maximum loan amount, so it doesn't matter what your debt to income ratio is going to be 548 in Sacramento County. Okay, so that's why I left it like this. Okay. Okay. Okay.
If you guys wanted to reach out to Lisa because we're running out of time, I just commented on the live chat that her number is in the description box below this video, so you guys could text her or reach out to her through that. Okay, if we don't have time to get in touch on everybody's scenario.
Okay, Mitchell. So if you are a homeowner, when you become a homeowner and your monthly rent stays below that 33%, okay, or $3,300, I'm sorry, then you could utilize an FHA loan. Okay, these are all the numbers that fit underneath this parameter. Okay, and this is what your monthly payment is going to look like. Okay, for each scenario.
What you qualify for, max.
Correct. So I'm going to open this up so you can see all of that. It's all under that 3,300. And if you were to buy at 575 with an FHA loan, this is how much it's going to be for a 3% down. This is how much you're going to need. 5%, this is how much you're going to need. 10%, this is how much you're going to need. 15%, this is how much you're going to need. And 20%, this is how much you're going to need. So that side hustle, if you're closer to this number or anything like this may be the number, that you want. So based on whatever it is that you have saved up, this is the one that you would choose. Now, here's the cool part, okay? Because you don't have any debt or any other debt, okay? As a single person, again, these numbers may be a little bit different, but if I'm basing it off of this, your income only, not only are you going to be a homeowner, but you're going to have a potential savings of $834 every single month. I don't know about you, but I think that's pretty cool.
That's great. You can still party, Mitchell.
And look at that, 2 years. And this is not even including his side hustle. So he's doing fantastic in life.
Good job, Mitchell. Keep that grind on. That was Mitchell's scenario.
Yep.
All right. Well, hopefully that helped you, Mitchell.
That helps you.
Yeah. If you guys have further questions, like I said, you guys could always reach out to Lisa. Her contacts in the description box, because I know that these loan scenarios, some of you guys might have more personal information you guys don't want to share, and that's perfectly understandable. It's a lot of paperwork, a lot of information, and it's very sensitive information. So we get it, so that's why we do this. It really for you guys to know what your situation is like, and it's kind of like a roadmap, right? Like a GPS. You want to know where you're at, and you want to know where your destination's at. Well, how do you get there? What are the routes? These are the routes. This is like the best way for you to figure out what your route is. And guess what? If you take a detour, you're gonna get rerouted if you follow this game plan and you follow what like the budget sheet shows you. So that's why it's so important to talk to somebody. And a lot of times I think, Lisa, why so many people don't talk to a specialist is because they think they have to pay for the service to do something like this.
I actually had somebody that just asked me how much is it going to cost after the consultation. She had a great time and everything. I was like, all of our consultations are completely complimentary. There are lenders and there are agents out there that will charge a retainer fee, but just so that you know, we don't.
Most of the time, a mortgage lender would be more than gladly to do this with you as a complimentary. And, just if the lenders that you've been talking to is charging you a fee, find somebody else. Okay, if you don't want to fork out some money just to do a scenario like this, find another lender. Okay.
So just so that you guys know, the budget analysis is not a lender's job. So most lenders won't have this. Doesn't mean that they're bad lenders, guys. It just means that this is not always the norm. Okay. So don't be, quick to give up on them or anything like that. But I want to show you this. So in the event that you just aren't in an area that has loan officers that do this for you, at least for your own self whether or not you can do this or not. Okay. And I'll be working on creating a consumer user-friendly PDF, and hopefully soon I'll be able to send it to Chia so he can upload it on the channel and you guys can all have it.
You guys can just go and download it It'd be
Mhm.
free, of course. Lisa, question. So we talked
Yeah.
about VA a little bit. We talked about conventional. We talked about FHA. What about down payment assistance? Debt to income ratio is going to be a little bit different with that too, right?
So typically, down payment assistance, it depends. There's so many down payment assistance programs. There's so many grants out there, guys.
The
And a
most
lot of
common one.
times, yeah, the most common ones is 45% and below. However, okay, we have it in our arsenal that it's the same criteria for FHA loans, which means it's 47 for your mortgage and 57 for the bottom. Now, for down payment assistance, again, I heavily advise you to take a look at the budget analysis, because the less you put down, the more monthly payment you're going to be making, and it's not free money. Most of the time, down payment assistance program is not free money. You're going to either have to pay it back once you sell or you refinance, or you're going to have to pay it on a monthly basis, or at some point you're going to have to pay that. Okay, there are grants out there. Usually grants are very specific. It is more so for low income families, sometimes in a rural area, sometimes in a not so great area that they're trying to pump up and make that area a little bit nicer and giving people incentives to buy in those areas. So it's very specific. Okay.
And also interest rates.
Yes, the interest rates are typically higher because the less skin you put in the game, the more risk the bank is going to see as that. It's like it's easy for somebody to walk away when they don't have any skin in the game. So that means they're going to have to charge a higher interest rate, which to me is a double-edged sword, right? If people don't have the money to pay for it and the interest rate's higher, it's going to be a little bit tougher for them to make that payment unless they did a budget analysis and truly see what they truly qualify for.
Yeah, the reason I brought that up, Chi fans, is because you guys asked me a lot. Is there any grants out there, Chia? Is there any down payment assistance? I don't want to use any of my money, or what if I don't have any money and I do want a house because I don't want to keep renting? I always like to say, find out what all your options are. Most likely, you're
Right.
probably going to like the more traditional FHA or conventional route more because you're able to increase your purchasing power. Because, for example, if interest rate was 1 point higher on the down payment assistance, that means that your debt to income ratio just went down. That means the same home that was at 300K that you did qualify for on FHA might got reduced to 250,000 now,
Right.
or maybe
Right.
less. So now it's going to limit the options you have as a first-time home buyer. So take that into consideration. Don't just take your friend or your family's word for it saying down payment assistance is great, utilize it. But your situation is different. Your
Right.
situation might require you to buy a home at a certain price range that down payment assistance is going to limit you on. So
Right.
best way to find out for sure for your situation, talk to a specialist.
Yeah.
Alejandro says, can you give me information on 203K loans? Lisa?
Yes. So 203Ks was much more popular. Actually, every outside of the box type of lending was a lot more popular prior to COVID. But with COVID, guys, with all the stimulus checks going out and everything like that, something has to give. And unfortunately, all these programs, is a little bit riskier for the bank. So they kind of don't do it anymore. But what 2 or 3K loans, it's typically an FHA loan. The interest rate is a little bit higher, okay? And it allows you to buy a fixer upper, which is a great thing. I've actually done quite a few of those prior to COVID. And let's just say, for instance, you take a look at the house. It's needs floors, it needs appliances, there's a wall that's missing, something of that sort. And depending on how much is needed, the bank will lend you on that. Okay. But it's very specific once again, because right now, the other reason why it's not available, because we touched on how lumber is quite expensive, and contractors are really hard to find right now because they're so booked up. A lot of people are renovating their house to turn their garage or to turn part of their backyard into another room so they can rent out and get more income. Guys, the difference between a successful person and a non-successful person is just your grit. How much do you want it? The more you want it, there's always going to be a way for you to do it. Can you combine your family and your brother's family together? It's going to be tight-knit. It's not going to be ideal for sure, but how awesome would it be if you guys just stuck with that? If you can't buy a house separately and you bought a house together and did that for 5 years and you built up the equity, and now you both made $100,000 each. Okay. Now with that $100,000, you, brother A, and you, brother B, can go buy your own house separately. How cool would that be?
Another thing, Alejandro, is if there is access to 203K loans right now, you have to also consider, will the sellers accept your offer? Because 203K loans is not your traditional loan where it could close in 21 to 30 to 45 days. It's going to be months because it's not going to close until the home gets renovated and done. And you're not going to be the one. And you're also not going to be the one that's going to be getting the check because the lender is going to be the one that's going to be paying the contractor. And the contractor, I think, has to be 203K approved, correct, Lisa?
So they have to be a general contractor on the most part. Now, Chia, the escrow doesn't get hold up because the house is not done. Okay. The house actually can close prior to renovation. But the way that it works is, say, for instance, if you're buying a house for $300,000 and you need another $50,000 worth of renovations, totally fine. Again, the bank is going to see whether or not after all the renovations, is this house still going to be worth $350,000? If it's not, then they're going to only lend on what the projected value of the house could be. And
after repair values.
Correct. So if you're going to do something like that, it's going to close roughly about 45 to 60 days. But thereafter, that $50,000 that the bank allotted just for the renovations, okay, they're going to pay the contractor in increments. So let's just say, for instance, there's a checklist. The roof needs to be done. The floor needs to be done. The bathroom needs to be done, so on and so forth. So they'll give $15,000 for the contractor on the first segment, another $15,000 on the second, and so on and so forth until it completes. The reason why, again, it's not as popular during this time is because contractors are very limited. I have a builder right now that's 2 months delayed. That's a builder that has several contractors in their pipeline and they can't even finish it in time. So for the bank, for every single month that the house doesn't get done, the bank loses money. And because of that, and because there's so many people wanting to buy homes, there's not really a need for the bank to want to take that risk.
Also, with all the competition right now, Alejandro, you got to consider trying to put yourself in the seller's shoes. What will the seller say if they see 10 offers in front of them? One is a 203K loan, one is a traditional FHA, traditional conventional, one is a cash. What do you think the odds are of them choosing a offer that is a 203K loan? It sucks to say, but in this market, they're most likely going to choose the one that's going to give them the best terms to where they don't have to wait on anybody. Fast close, highest net, best terms. And also, 203K was really popular during a buyer's market. Correct me if I'm wrong, right, Lisa?
Yeah, that was created to give incentive. I mean, back in the days, it was so sad. In the 2007 era to 2010, people were, I wouldn't say vindictive, but they were just really so distraught that they had to move that they just started destroying their properties. I mean, we had properties that somebody poured cement down the drain and the whole entire plumbing had to be redone. People were so pissed off that there was holes punched in the walls and all that other stuff. And other people didn't want to buy it. So these loans were specifically, more popular during that time for that reason. And now
Alejandro,
go ahead.
Sorry. Go ahead.
It's okay.
Now that what?
Okay.
Sorry.
Well, I just lost my train of thought.
My bad.
It's okay. Chia and I, we're human.
Alejandro says, is there another option that's faster?
So there is construction, renovation loans, conventional renovations, but unfortunately, again, not at this time.
Some banks are just not offering it because it's just too high risk. And
yeah,
you guys got to think of it from this point of view too, okay, Alejandro? Banks are in the business to make a profit and they sell loans. What is the most popular loan that they can make the best money for the same job right now?
Correct.
FHA, conventional loans, traditional loans. Why would a banker promote a 203K loan if they could make the same, if not more money on a traditional loan? So right now it's unfortunate, but a lot of departments right now in this industry are cherry picking, just like appraisals. Oh my God, we're not
Right.
even gonna talk about appraisals in this episode, but
Mm.
you know, we're gonna lead up for a different segment since we're already over an
Mhm.
hour. But that's one thing to consider. But if you must have to go through that route, Alejandro, I would say, and down payment isn't an issue, then maybe go with like private financing, partner with somebody. Um, if you were a friend of mine, I would say, hey, buy the home. It's ugly now, but get it under a traditional loan. But use your credit cards to renovate it. And then if you've calculated that the after repair value on that home is higher than what you bought it for, and it's enough to cover your credit cards, then do a refinance to pay off your credit cards. If
Right.
you were a
There's
friend and family member, I would say that.
yeah.
So there's a lot of creative ways you can go about it, but again, it all depends on what you want to risk and what you want to involve and what you're willing to fork out. Hopefully that helps. I know we didn't really quite answer your question, but right now it's kind of like not the market to um, even go into 2 or 3K loans because nobody's offering it right now.
Not that I'm aware of. Okay, there might be somebody out there, but I just don't know who they are right now, guys.
And I think that's a good closing, don't you think, Lisa?
Yeah, I think that was a great segment. I hope that that was helpful for most of you guys out there. Again, please feel free to reach out to me. I'm more than happy to do your scenario privately and accurately for you.
Yes, and thank you guys so much for all the comments and for liking this video. Appreciate it. Me and Lisa appreciate it. And we will be back next week. We'll probably talk more about more loan scenarios. But I'll put out a poll. But have a good night, Chi Chi fans. You guys take care.
Bye, everybody.